So just going back on Jay's like visible gold and talking about exploration plays, it's fascinating. Like for me to see how much I've changed, and I'm so glad you brought up the 100%, doubling over and over. It's like I fully expect at least a double in anything I buy these days. I never thought I would get to that, but like that is when I buy. That's what's neat about that basic strategy you mentioned. Like I think it's an excellent newbie idea. Like you really can't go wrong with like selling half on a double. I like to play around with that number. Sometimes I'll start selling a little bit when it's up only 30 or 50%. Sometimes I'll hold on to a stock, until it's a triple or 4 or 5 bagger before I
did
really
that last
start
time. I waited until it was like 300% because it went up that fast that I was like, should I sell? Should I sell? Oh, okay. Yeah. I sell a little bit now.
Yeah, and the caveat I would add is if it's a real legitimate story, like like massive, like thick intersections and high grade and all that good stuff. I mean, it probably wouldn't be the most prudent thing to just sell immediately on the first double, right? Because if you're holding on to something special, you might want to keep milking that for a little bit longer anyway. But the stuff that's more speculative, I'd say is a good candidate to kind of sell. And like Nick was saying, it doesn't have to be a hard and fast rule. It doesn't have to be at exactly 100%. Sometimes if I'm up like 10%, I'm like, maybe I should trim some because I don't have the confidence in this stock or something. But like 20, 30, even 50% is probably a good time to start thinking about it anyway. But it's case by case. I think it's hard to put a general rule on these things.
Exactly, case by case. And so when you brought up visible gold, one thing, this is where you really need the experience, and it's so hard when you're like, none of us are geologists, and like, I try to get some advice, but you still never really know. But like visible gold, as an example, that, as Jay mentioned, that's totally like a retail pump. Like, people are in the industry in these big companies, they almost never care about that stuff. But when you start seeing visible gold all over a news release, they're trying to pump it to people like us. And the thing is, sometimes there is a legitimate reason for that being good, but more often than not, it's just trying to build up the hype. And so if you see something like visible gold and you see a stock, spike, like the price spike, that to me is a good example of a reason to start selling some, because it probably means that the spike is more based on hype than the fundamentals. But as Jay mentioned, sometimes a stock, it doubles or it triples, but the results, like the fundamentals behind the results, are so good that you actually want to hold on, and you might even buy more. And so one thing I'm trying to learn, Jay brought up some great points, like you can make a double or a triple before the drill results even happen. I still like buying those types of plays more than anything else, but sometimes the most prudent thing to do is to either wait until the drill results happen or to just double down after the drill results. And that's harder for me to do, but that's where the geologists and their expertise really come in. I mean, that's like, there are so many plays like that. I mean, we go back 20 years, like Diamond Fields was like that. They had results. That was the big play, in the mid 90s. But I'm just reading the Big Score book. Yeah, I've got it over here. But anyway, like that was one where you would have made over a 10 bagger in the year following, the initial results, and people, more people made money after the results than before, because it was so hard to know what was going on. And so before and after drill plays, like it's hard to pick up, but you just need that the experience. But also understanding, which types of plays will newsletters pick up on. That's what, will also create a double or a triple before the news. And just to give a plug to CEO.ca, that's one of the best things about following a site like that is you get a pulse of the market, especially the retail people. You can figure out, where the momentum is. And sometimes it's not just what's said, it's what's not said. Because if you see good results or you see some interesting stuff happening, but no one's talking about it, that's where the fundamentals come more into play. And I'm personally more likely to hold on to a stock that no one's talking about. So I love picking up that information all around the internet, but like CEO.ca is a really easy place to get that history and also to know, when a result comes out, what's happening. And I just wanted to also add, or a couple of things. I'm totally guilty of buying. Like last week, I was supposed to be raising cash, and it's like, oh look, another stock, like
something
a shiny rock or something. I throw money back in. So I don't know if that's a good idea, but I've been doing that, and it's just the only saving grace, as Jay mentioned, is like I've got these free rides on these other stocks. So it's like if you're still holding other stuff, and then you're putting money in the new stuff, and you just keep multiplying it. It's like it's like all these stocks could fail, but every new stock that you buy is another chance that at least one of them is going to work out. So it's kind of it's like you're a little venture capital firm planting seeds. So that's my justification for it. But also, what's great about exploration is even though it seems like we missed out on some opportunities in the first half of the year, there's always new exploration coming out. So for me, what's exciting is that exploration is not going away during the cycle. There's always going to be some new plays, and there's always something out there. That's where you need to look at the other exchanges. Like I'm still finding more new stuff on the ASX in Australia or AIM in London compared to the TSXV in Canada. But I think that's going to continue. While, as an example of something where you're running out of ideas, are developers. Like there were some great places to make money in developers, like Kaminak or TrueGold. But all the good ones were taken up, and that's also why, even if it is much harder to evaluate explorers, it is a good idea to try to at least get a feel for it. I mean, and again, like I'm selling my my own book. Like this is what I do, but I feel like if you want to have continued opportunities throughout this cycle for the big win, you eventually have to start looking at the explorers because they'll always be there. While the bigger plays, sometimes you just run out of them. So.